According to Bloomberg, 40% of homeowners own their homes outright. This is a record high of mortgage-free home ownership. I'm seeing housing prices decrease, but interest rates are higher than Snoop Dogg on a jumbo jet. So how are so many people affording to pay their homes off, and let alone just afford their mortgage? Well, I found a hack anyone can use to reduce the amount of years that they have on their loans by 7 years. So stay till the end and you'll learn just how easy it is to do that method. But first, hi, my name's Kwame. Welcome to the channel. If it's your first time here, we like to talk about personal and financial growth. And today we're making your life a little less complicated and teaching you a method to pay your mortgage off a little bit sooner. So I don't talk about get rich quick schemes, and I'm not gonna lie to you. This method is simple, but it requires a lot of discipline. So if you think you've got what it takes, let's get into it. Owning your home outright is a dream for so many people. Not only does it make you feel more financially secure, but it can also offer a host of benefits. And today we'll explore how to make that dream a reality a little bit sooner than you think. But let's get into a few of the benefits that comes from owning your home outright. One of the benefits, if not the biggest benefit of owning your home outright, is saving hundreds of thousands of dollars on interest payments. And that is a huge chunk of change that you can keep in your pocket. Many people don't realize that in most cases, when they sign their name on that dotted line after they purchase their house, they're actually guaranteeing the bank that they will receive 100% on their return on investment. And I don't know about you, but I prefer to keep that interest to myself. The second thing is, once you've paid off your house, you have free flowing cash flow. And that is the most passive form of passive income ever. You literally don't have to do anything and you're just saving all your money. The average national monthly mortgage payment in 2022 was $1,768. And imagine what you could do if you were saving that money every month. You could invest in another property, or you could fund your own business, or you could buy a kangaroo if you wanted to. It's your money. And let's not forget the financial freedom and flexibility. Without a large mortgage, you're free to make whatever financial decisions that you want to with little consequence, because you don't have a burden of this large debt weighing over you. And at that point, it's more about money. It's kind of about your quality of life. So getting past the obvious benefits, let's get into the methods. And I'll be honest, there is a right answer, and we'll get into that towards the end of the video. So let's get into methods. I'm sure you're thinking, why don't we just consider refinancing? Now, if done at the right time, this could lower your interest rate, and in conjunction with switching to a shorter loan can save you a bundle in interest and fast track your payoff. It's not a bad method, but when you refinance, you're essentially resetting the clock on your loan, and you're just going to pay the bank more interest, which is what we're trying to avoid in this case. So let's not consider refinancing. And next, you'll probably say, well, I've seen some videos on using a HELOC to pay off my mortgage, or I've talked to a friend who's done this. And what I'll say to that is, that's not the best method either. And honestly, that's the problem, right? You're still in debt. The whole point is to pay off debt so that you can be financially free sooner. And so what a HELOC does, it just moves around the debt. And actually, Dave Ramsey has a great video on this where a caller phoned in inquiring about this very thing. And he makes some great points.
I wouldn't.
Okay.
You want to know why?
Why?
Because you're going to feel like you did something, and you didn't do anything. All you did was move it. Now listen, all you did was move it. Interest rate's not your problem. Lack of a budget, lack of focus, lack of attacking this is your problem.
So really the way to go is to make extra payments on your mortgage. And with the method that we'll talk about in a second, you'll realize that making extra payments is actually a lot easier than you think and has a significant impact on the interest payments that you'll have. Did you know that making one extra payment every year, not every month, every year, can reduce the term of your loan by 7 years? That means if your mortgage is $1,000 a month, if you pay an additional $1,000 every year to the principal, you can reduce a 30-year fixed loan to a 23-year loan. And let's just say you don't plan on living in the house for 30 years. Well, you can always pass that equity on to the next home that you choose to purchase. And that equity will just be in that new home. So let's take the average cost of a home in New York, which is $453,138. And whatever the price of the home or potential home is, you can do this you can do this calculation too. So I like using mortgagecalculator.org. It's the best one that I see that's out there, but I know there are a ton of other sites out there that do the same thing. So, but we're just going to go to mortgagecalculator.org and we're going to input the price of the home, the interest rate, and some other pertinent information. And then we're going to click calculate and we're off to the races. Okay. So let's look. So when we look at the monthly payments, you'll notice as you make those extra monthly payments to the mortgage, your interest owed is slowly being reduced because it's tied to the principal and you're slowly paying that down. So for this home in New York, you'll see if you follow this method for the first 5 years, you'll save nearly $5,000 in interest. And at year 22, when you're done with the loan, you'll be saving a whopping $188,907 in interest. And this is just making one extra payment a year. So if you made 2 extra payments a year, you'd be saving $251,591. And you'd save 10 years on your mortgage. And as you can see, this method scales. So for every 2x extra you pay on your mortgage a year, you save roughly an additional 2 years on your mortgage. And what I love about this is that anybody can do it if you have the right budget in place and you have the discipline. And what I've noticed is this works really well for rental properties. So obviously you have your renter, and at the end of the year, you make one extra payment or multiple extra payments, and that greatly reduces the overall amount on the loan that you owe for your rental property if you have it financed. And I just want to add that you should check with your lender. I know in some very rare cases, there are penalties incurred if you decide to pay off your mortgage early. And honestly, those are lenders that you probably don't want to have in the first place, but definitely check with your lender. I've checked with mine, and honestly, paying towards the principal is fine. I don't incur any additional penalties for doing that. And so we'll continue to do that. So for me, the journey about being mortgage free is not really, it is about the money. It's definitely about the money, but it's also about what I can do after, right? Like having a big amount of debt tied to you feels like you're lugging around baggage everywhere you go. And the more you pay down that mortgage, the lighter that baggage gets. And a lot of us are walking around here with a lot of baggage. And so just having that weight not tied to you anymore and being able to walk freely throughout this world is such a beautiful thing. And really, it's about being free, being stress-free, and opening up new possibilities in your personal life. So that's it for today's guide in paying down your mortgage quicker than you expected. I hope you learned a little something today. If you did, or if you've paid off your mortgage, leave a comment. Don't forget to like and subscribe, but I will catch you on the next one.